All right, our next speaker has a phenomenal network down in Houston, a local meetup. It's not even a meetup, oh my gosh. It's a local investing group down in Houston. I've been to his office. It's beautiful. Love the energy, love the synergy there. You all probably all know him. Give a big hand for Mr. Steve Davis.
Started like one, it just begun, big action, pop up the volume, speak up last done, shake up the ground, shake up the ground, shake like a earthquake.
Thank you, everyone. It's an honor to be here. Tim asked me to talk a little bit about onboarding investors and taking care of your investors to ensure that they reinvest with you. When I onboard and my students onboard people, we almost always use Invest Next. Are you guys familiar with that? No. Interesting. Invest Next is powerful because you can set up a link. People go to your website, they click, it takes them to Invest Next, and they really do your onboarding for you. The power of Invest Next is that if you modify your PPM, they'll modify their software to match your PPM. It's a phenomenal company. Invest Next, I believe it's investnext.com. For me, in the beginner stages, what I did, I contacted, when someone showed interest, I contacted them myself. As I got larger, I had a team that did it. Depending on your size, I think a reach out, personal reach out is invaluable because not everybody's doing it. When you do it, it separates you from the crowd. The other thing that I do in the initial stages is send them details on one of my past deals, a full circle deal, bought, refinanced, sold, and let them see some numbers from the past. This is, again, people who did not know me. Be aware when I started syndicating, I was nobody. I mean, it was one of those things where I just said, I'm going to do it. And I had to create myself, and one of the ways I did was through immediate follow-up, contacting them, letting them know how grateful I was that they put their name on, and that I had the opportunity to raise capital from them. Then, when it comes to keeping them, once they're in a deal, reporting is everything. Reporting is everything. Stay in contact. I can tell you this, we have 20,000, 30,000 apartment units among the members. The only time I get a phone call from an investor with a problem, it's lack of communication. Every single time. Stay in contact with them. Keep them informed of every transparency. If you're transparent and you bring them the next deal, they don't even ask. They just do it. They go, here's my next deal. And because you reported everything every single month for the 2 years they were in your first deal, I'm telling you, they don't even ask. They just, I'm in. How much? Well, can you do 500? I can do 300. Great. So communication, stay in contact, and anytime anything goes wrong, that's an email within 24 hours. Example, interest rate goes up. My mic's not working.
No, it's just what you're saying is so important. We need to hear it through 2 microphones.
Oh my God. This guy's full of shit, man. Is this one working? Example, one of the syndicators had a major problem to the tune of about 500 grand, unexpected. Immediately, an email went out. I'm talking within 24 hours. I goofed up, $500,000, here's what I'm gonna do to solve it. Not one complaint, not one, from any of the 40 or 50 investors that were in the deal. And that was a 500 grand mistake. not quite 500 grand, but pretty close. Your investors will be very forgiving if you're constantly communicating with them. And they don't expect you to be perfect. That's another thing. Don't hide your mistakes. Let them know what they were. Keep them informed. Now, should you also promote the things you do right? Absolutely. That email should go out. Hey, I totally goofed up and we made an extra 100 grand. Email everybody. So make sure you're promoting the good things as well. And then reporting, I send P&Ls every month, rent rolls. I mean, everything. I like to overwhelm them with information. Most of them are not going to read anything but the P&L anyway. And then, P&L. And then I do a little letter that basically tells them a few things that happened during the month, what we're doing to solve it. And that keeps people so informed that they don't get imaginary how do I put it? People will make stuff up in their head that's going wrong, that's not actually going wrong because you're not communicating with them. I haven't heard from them in 3 months. There must be something bad going on. That's what they do. But if you're contacting them every month, totally transparent, communicating problems, good things, communicate with everyone all the time. And my repeat investors were probably something like 70 or 80% of them. So by the time if I was raising $5 million, before I even sent out the deck, I already had 3 or 4 of it. Sam Morris, one of the sponsors at Total Wealth Academy, raised $6 million in 2 days because of his record keeping, his communication, his credibility. So it actually gets easier and easier and easier as you go. Then one other thing, make sure your first deal is a home run. Make sure your first deal is a home run. Now, why do I say that? Because a lot of people, greed gets involved. They want those fees. They want to get their first deal done. And they take marginal deals. And that is a mistake. I believe you should be patient on your first deal, because that's the other thing. You want to get your first deal done. Man, be patient. Get the right deal done first. Because you're building that foundation. You're building your credibility. If your first deal is a home run, I'm telling you, it just gets easier and easier and easier. So that's really all I can speak to as far as that particular subject goes. Let's go into my slides. Raising capital, investor clubs are a good option. And they're coming up across the United States because I believe the trend in America is going to be passively investing more and more and more and more. If you look at the stock market, over the last 75 years, everybody know what the stock market returns? I've heard as high as 7.5, but it's like between 6 and 7%. Do you realize after inflation and taxes what that is? Nothing. Did I hear somebody fart over here? That's exactly what it is. Excuse me. It's nothing. That kind of rate of return kind of comes with some guarantees. I guarantee you'll never get rich. I guarantee you'll never be happy. And I guarantee you'll never retire. If your money's sitting in the stock market going with the average over the last 75 years, you got those 3 guarantees coming. Our average internal rate of return for our properties, and we're doing everything from apartment complexes to self-storage, senior living, is right around 20%, so 3 times what the stock market is doing. That gives people and families the opportunity to make enough money that inflation is accounted for, taxes are accounted for, and they're still making some money. I'm all right. Yeah, if you would leave it there, I truly appreciate that. Yeah, right there. Little to the left. Oh, okay, thank you. All right. What we are is we're a real estate investor club with 80% of our members investing passively and 20% actively. Most of those active investors are either the sponsors themselves or small investors who are buying groups of single-family homes. We spend about $100,000 a month to build our membership base. This is our radio shows. We're on in all across Texas, San Antonio, Austin, Dallas-Fort Worth, and of course multiple stations in Houston. This includes television. We have about 2,000 members, and we're adding between 50 and 100 a month. 50 and 100 a month. Our passive investors have an estimated $200 million ready to deploy, and we're adding between $10 and $40 million a month. So the average is somewhere around 20, I believe. Now, all of our members are sophisticated and know what they're doing. And let's make a distinction, because people always talk about accredited investors, and they love accredited investors. I hate accredited investors. And the reason I hate them is because they don't know what they're freaking doing. I've been sued 2 times in 33 years, won both cases. How do you call it winning when you had to spend $50,000 to defend yourself? Both of them were accredited investors. I have never had a sophisticated investor sue me. Why? They know what they're freaking doing. So even the accredited investors at Total Wealth Academy have to take 14 hours of training to become sophisticated. If you come to Total Wealth Academy to raise capital, every one of my members knows what they're doing. They can read the P&L. They can understand a PPM. They understand the operating agreement. They understand the ups and the downs of real estate transactions. So these are people that are very unlikely to ever give you any problems. The reason we do this is we're striving for parity, and I suggest you do this too. Watch out for dumb doctors getting in your deals. Everybody familiar with the dumb doctor deal? I think it's more appropriate to call it the dumb high income earner deal. The problem with, okay, why do they make big money? Because they're brilliant. The problem is they know it, and their ego gets involved. And they go, man, I'm a great doctor. I'll be a great investor. No, you won't. That'd be like me saying, I'm a great investor, I'll be a great doctor. Anybody want me, can I operate on anybody in the room? Nobody. So watch out. Get your people educated. Make sure they understand what they're getting in. Oh, you know something that came up earlier? This is a different subject. Don't overpressure people. You know who will end up suing you? The one you pressured into the deal. Because they get buyer's remorse, and the first thing that goes wrong, what do? I'll get you. So be careful of overpressuring. Let them sign up. Don't force them to sign up. Be cautious about it. Again, if your investors know this much and your sponsors know this much, again, the investor's never going to know as much as you guys do. But you want it as close as possible so you can never appear to be taking advantage of people. Okay, so that's how our system works. Any of you that are raising capital, please reach out to me and I can give you all the details. It's $20,000 to enroll, and that covers you for 2 years, and you can raise as much capital as you want during that 2-year period. After 2 years, it's $4,000 a year, and you can continue to raise capital. Catch to it. You've got to come to Houston twice a year. This is how the members get to know you. You need to speak in Houston about twice a year. 1, to teach a class, and 2, to do a case study of one of your deals. That's how you get to know the people, that's how you build the trust, and so on. Then we will take care of getting your name out to all the members. We put you on a sponsor page where they can click your name and register at your website to get on your list. And then when you have a deal, you email it to me, and then we send it out to all the members to remind them that one, you're on that sponsors list, and two, you've got a deal working. So it's a very effective way to raise capital. Are there any questions on what I just reviewed before I go into a few tips on pitching passive investing? Okay. This is something I love to do. I do it on my radio show. Tips on selling passive income, because that's what you're really selling. This is what gets people excited when they think about having a second stream of income that meets and exceeds their wants and needs. And that's what you're producing for them, most of you. We do want to make a distinction, and you want to get this through the investor's head, that speculation and investing are two different things. Stocks, REITs, gold, silver, and crypto are speculation. You only make money when it goes up in value. We've all heard the mantra of the speculator: buy low, sell high. This is gambling, and here is why. What if you turned 70 in 2007 and you're speculating in that stuff? What happened to you? You got slaughtered. In 2007, I was in 4,000 apartment units. My values dropped 30, 40%. Did I care? Not one bit. Because let's say I was making 80 grand a month cash flow. After the crash came, what was my cash flow? 80 grand a month. It actually went up. Remember what happened in 8, 9, 10, and 11? What did rents do? Went up. So did I care, again, that my property values dropped? No. See, that's the difference between speculators and investors. Investors make money in both the up and down market. Speculators lose in the down market. Let's see. Oh, this is a statistic you need to use. 18 times the stock market has crashed in the last 100 years. 18 times. That's about every 6 years. And what's unusual to me, or weird to me, is people will come up to me and go, man, I'm just shocked that the stock market is crashing. What the hell are you talking about? 18 times in the last 100 years. Don't ever get shocked at the stock market crashing. That's what it does. Don't ever get shocked if real estate crashes. That's what it does. They what? Up and down. It's not if the stock market is going to crash, it's when. It's not if the real estate market is going to crash, it's when. But it's not if the stock market and real estate are going to recover, it's what? When. So as long as you got that cash flow coming in, you don't care if it goes up and down because you live in reality. It is going to go up and down, nothing you can do about it, but you got the cash flow. Now, I think I've addressed this. Yes. Yes, okay, this is a different example, but let's say that you are the passive investors and you've generated 10 grand a month in cash flow. Market crashes, what happens? You've still got your 10 grand a month cash flow. Address that. Oh, okay. This is just, again, make sure you make the distinction for them because a lot of them are confused about the difference between speculation and cash flow. Now, let's get back to why you need passive income. People need to understand that saving your way to retirement is completely ineffective. It doesn't work. Savers are losers. There's Robert Kiyosaki. The reality is today's money has fake value and it's making you poorer. And if you are a saver, you're a loser. You're losing money every year that you save it. It needs to be working, helping and serving other people, or you're losing money. To have $10K a month in retirement, how many of you knew you have to save $3 million to do that? So these families you're talking to that are debating, should I build passive income with this syndicator or should I save my way to retirement? They need to be aware, using the 4% rule, you have to save $3 million. Now you're 45, Mr. Smith. How much of that $3 million do you have saved? You don't have to answer that because I know. You don't have it saved. It's not going to work. So Next thing, people need to understand that the IRA and 401k are epic fails. Did you know that a 401k and IRA only saves you taxes if you fail financially? That's the only way. Think about it. If you have an IRA and you save up $3 million, you made $100,000 a year while you were working, you're in the 23% tax bracket. You retire and take $100,000 out of your IRA, what tax bracket are you in? 23%. IRAs and 401ks do not save you taxes unless you fail financially. By raise of hand, how many of you have the goal of failing financially? Nobody. Then why is your money in an IRA or 401k? Financial planner didn't advise you correctly. They also need to be aware that the saving your way to retirement doesn't work. And to prove it, the U.S. government has let us know that 95% of Americans fail to retire by age 65. 28% of us are dead by age 65. The golden years are a freaking golden lie. Golden lie. Men with women, female wives, they're going to outlive you 18.5 years. Are you prepared for that financially? Are you? Building a second stream of income solves that problem because it comes in whether they live 18 or 50 years beyond you. Another big misconception people need to understand, most people think that their bills get lower as they get older. They don't. Oh, my kids are moving out, college is paid for, life's going to be great. What about medical bills? Do you know that to live to 80, a couple will pay $700,000 in medical bills? $700,000. Your bills do not get lower as you get older. You got to get them prepared and you got to get them to understand that and to want to prepare for that. And then this is my favorite close. You just freaking miss out on life. If you just save your way to retirement, you scrimp, you save, you don't take that trip, you're going to have these golden years. You know, they show you on TV the couple walking the beaches of Greece, the couple on the cruise ship in their late 50s and 60s and 70s. It's all bullshit. The average 65-year-old has $170,000. 170. Anybody retiring on 170? Nobody. It's all bullshit. The other thing is, getting old sucks. It sucks. I'm 58, going on 59, lower energy levels, lower cognitive skills, lower sex drive, lower everything. Getting old sucks. Am I the first one to warn you about this? Here's the problem. Egotistical older people won't tell you it sucks. They want to go, oh, I'm just as good as I was in my 30s. No, you're not. I will give you my boat, my Ferrari, my house, my money. Give me my body back from 30. Right now, anybody can do it. You can have everything I've got. It is way better to make love to your wife under the Eiffel Tower in your 30s than it is in your 70s. Sorry, guys, but that's the truth. Live now. These people that you're helping, that you're taking their money and investing it and building them a second stream of income, they're able to enjoy life more because of what you did. Again, that's my favorite and has pushed people over the edge. You'd be surprised. Why should you use real estate to build your second income? Okay. You can retire at any age. Age has nothing to do with retirement. Your passive income dictates that. I've had some friends and students literally in their 20s that had $20,000, $30,000 a month in second stream of income doing what you guys are doing. So you are on the right path. Of the 5% that do retire at or before age 65, almost all of them have a second stream of income. This is going back to that statistic. 95% of Americans fail to retire. You go study the 5% who do retire, they've all got second, third, fourth streams of income. 90% of them used real estate to produce that income. And real estate is the lowest risk investment out there that I've seen because we make money in both the up and down markets. And everybody, I hope, knows that bottom part. We make more money in what? The down market. What are we all praying for right now, if you're wise? A crash, more down market, more down market. So, conclusion, to have the highest quality of lifestyle, to live well while you're young, to be able to retire at any age, you must have passive income. So I hope some of those tips you can use when you're talking to these prospects that want to invest but are maybe a little bit scared or don't have enough reasons yet. Some of those reasons will help. Any questions on any of that? Okay. Here is my contact information. If my best is the email. If you email me, I'll get back with you, I'm telling you, within a few hours. And I love email. I don't know what it is, but I get a dopamine rush every time I fire an email. It's crazy. Email me, Steve@Total Wealth Academy. Just let me know that you saw me here and you're interested in raising capital at our group, and I will reach out to you and get you further details. Again, Steve@TotalWealthAcademy.com. Steve@TotalWealthAcademy.com. All right, I am complete. Who is next?
All right, Steve. They came for Steve.
Thank you, I appreciate it.